Hi everyone, welcome to this episode of Finance is New Black. Very disappointingly, no guests unfortunately this episode. It's only little old me, but hopefully get some good information anyway. For everyone who has been subscribing and sending back their feedback, we really appreciate it. And we hope to continue to add some more value for you. This week we've just got some questions that have come in from our social channels. So we've got Marie quite nicely asking the questions. So what's our first question, Marie?
The first question comes from Natasha in Heidelberg. As a first home buyer, how does my student loan affect getting a home loan?
Okay, very good question. Look, we actually covered this topic briefly in one of the previous episodes, but essentially the student loan or your HECS debt or your HELP debt basically is the debt that gets taken out of your income just before tax. So you'll have your tax taken out, then you'll have your HELP debt, and then you'll get paid the net figure. The way the banks treat this figure though is they treat it as like a liability. So if you are paying about $300 a month, then they will look at your situation and say, look, you might be on $60,000 a year, you're paying $300 a month in HELP debt, and you now have $300 a month as a repayment until you pay that HELP debt off. So while you do have your HECS debt and you are working away and paying that down, if you are looking at lending, unfortunately, it will be a negative towards your borrowing capacity. So it will reduce how much you can actually borrow with certain lenders. So it's one of those things that, it's a bit of chicken before the egg. You want to be able to get in as quick as you can, but you've got to pay your HELP debt back first. We do have questions from time to time from clients saying, should we pay off our HECS debt so we don't have that liability and use our funds for that rather than the deposit? It's really going to be horses for courses in terms of your savings patterns and how quickly you can get that paid off and other sources of money you can use to get rid of the debt. But unfortunately, the way the banks view it is that it is a liability against yourself, and whatever that repayment you're making each month will be seen as a liability. So not unfortunately a positive answer there, but at least those out there that have the HELP debt, they can take this into account and know that, okay, well, this is the way that the bank will view it if I am looking to borrow. But thank you very much for the question, and we appreciate you sending it through. What's the next question?
Next question comes from Nick from Doncaster. I need a new car. Should I take out a loan, lease a car, or should I use my savings to purchase a new car outright?
Very good question, Nick. And look, with our kind of the younger demographic coming through and generation coming through, that is always, the question really, you need a car to get around, but you also want to obviously use your savings towards, getting into the property market. So it's one of those catch-22, unfortunately, that, you can use the money for the car, which means you're not going to have a loan, which will help you out when you do try and get a loan, because that loan itself for the car will obviously be seen as a liability, which isn't great, and also that takes away from your borrowing capacity because that monthly repayment on that loan will be reduced from that income that they're using to show that you can support a debt. So, you're kind of damned if you do, if you're damned if you don't. In my personal opinion, it comes really down to your personal circumstances. For me, the only time it makes sense for you to get a car loan or lease if there are any tax deductible advantages for having that loan. So, if you do take out the loan or lease and you are using the car for work purposes or visiting clients or whatever it might be, and your accountant tells you that it can be claimable, then obviously that can assist your tax situation to help you save the money or get the money back at tax time to be able to offset the repayments you've got and contribute towards saving. Ideally though, that you're best to not have the loan. That's going to help you more to be able to get into property. So, that may mean rather than buying the brand new car at this point in time, you might have to take a little bit of a backseat on that goal for the moment and then buy something that's, that will get you from A to B for the moment, to put that hard-earned savings away for that greater goal, which is buying the property. But really what it comes down to in the end is what's more important to you. Is having a new car more important, which is for some, or is it having property? And whichever that goal is and whatever's more important, most people will do what's necessary to reach that goal. So if it's a property point of view, they might just buy something to get an A to B, spend little as money as they possibly can and keep their savings for the property. As opposed to, if your goal was to get a new car and you've worked hard for it and that's fine, then you might spend it on buying the car or potentially getting a lease and getting something much newer. But in my opinion, really with all these discussions around, what the best way to get into property, it's really about setting that goal in terms of what that looks like and working your way backwards from there. So, what do you need to be saving per month to get you into that position where you've got the deposit for the property? And if that means you can afford to have a car loan as well as still saving, fantastic. If you can't, then you've got to make those sacrifices, unfortunately, to get to that goal. So look, it's not I suppose always a goal for everyone to buy property, and that's fine. But those that do want to get in, there is going to be unfortunately some sacrifices to make sure you've got the deposit and you've got the cash flow to be able to support a debt and afford to buy a property. But it is a good question. It's very, very relevant at the moment with a lot of the younger guys who have just started out and trying to figure out the best way to go. But it's always comes down to personal circumstances and whatever your personal goals are. Look, this one's a very short episode. I really appreciate everyone tuning in. Again, if you like the episode, please subscribe to the YouTube channel. If you are subscribing on YouTube, appreciate any comments in the comments section. And if you did like it, share it with your friends and let us know your feedback. Thanks again for tuning in, guys, and we hope to see you soon. We look forward to receiving your questions, and you can post your questions either on our YouTube channel, our Facebook page, or you can private message us on Facebook. Send through your questions, and we look forward to answering them.